Hello guys, my name is Colin and this is Colin Talks Crypto. It's been a little while since I've given you an update and I think that today is a good day to do that. So what do we have? We have Bitcoin currently breaking out of several sub-chart patterns, and I'll go over that in a second. Currently just has reached $109,600. And I want to show you not only the global M2 versus BTC chart, because many of you have been wondering about that, but TLDR, we are still on track and everything is looking fine on that. So we have really 4 charts I'm going to take a look at real quick here. I'm going to try to make this video brief and hit the point home that everything is dovetailing in one direction. All these charts are saying the same thing, from a low time frame to a high time frame. And on the backdrop of it, we have global M2 correlated to the Bitcoin price, shifted ahead by 84 days, telling us that the global liquidity injection has not stopped. Sure, we may have a little pause, we may have a little breather. Correlation may not be perfect. It never was. It never was 100%. It's always been 80%. There will be deviations. We have been in a bit of a deviation currently, but that doesn't mean it's broken. It just means that there's deviations 20% of the time. Otherwise, it looks really beautiful. I mean, if you look at this chart, still looks fine. Looks great to me. So there's a lot of people that are quick to become fearful, quick to say it's broken. And I think that these are inexperienced people who haven't spent a long time looking at charts and just having the skill set of patience. And it shows because you get 1 or 2 days or a week of deviation and they're crying, and this is a macro indicator. So I'm sorry, you have to step back a little further and you have to learn some patience and just calm yourself, relax, take a deep breath and wait. Now that doesn't mean that this is always going to correlate, and I've already made a video on how we're going to deal with that with a diversification of metrics, specifically the CBBI.info index that I designed, but quite a few other metrics as well to help us not rely on just this one chart, okay? But that's what I want to show you for today. The global M2 versus BTC correlation is still looking strong despite momentary decouples, decorrelations. It's okay, that's part of the game. Now, let's zoom in a little more because what do we have here? We really have the perfect storm. Let's zoom all the way in. So here's an inverse head and shoulders with a measured target. You take the neckline to the head, and then the breakout point, you measure that same distance up. So that gives us, it's about $35,000 from here to here, from the neckline to the head. And then you add that to the breakout point. You do have to have a breakout, okay? So we do need to wait for Bitcoin to break above approximately $113,000. But if and when it does, then the measured target is 35,000 plus this point here, which brings us to just about $150,000, give or take. Now, I want to back into this chart pattern and go even smaller time frame. This right shoulder here. Let's take a look at this right shoulder and what has just happened. So you can view this right shoulder. This is the right shoulder zoomed in, okay? In a couple ways. And I think these are the 2 best ways. You can view it as a bull flag, which is real clean, and also as a bullish pennant with a lot of points of contact. I zoomed into the 4-hour time candles here so that we can see there's 5 points of contact on the upper trend line, 7 points of contact on the lower trend line. And I made this chart just a couple hours ago. It actually just broke out. So this bull pennant just broke out. This bull flag just broke out. And that's what we're looking at right here. The dotted white line would have made the lower boundary of the bull pennant combined with this upper yellow line. And then the 2 yellow lines here are, of course, the bull flag. Okay, and what do we have? We have a breakout. This is very, very bullish. This is as expected. All of these chart patterns are saying the same thing. Now, we don't want to jump the gun here. This could be a deviation. This could be a fake out, although I would say there's a good chance that this is the start of a move up. Probably we'll see a retest and then a bounce. And as soon as we get that confirmation retest, that bounce, that support holding, this trend line holding, we're off to the races, folks. Like, we are off to the races. And I think that it's due. The time is due. I mean, You zoom out, we've been in this pattern for a very, very long time here. This is the inverse H and S. I'm going to put that on the chart here. And I mean, God, all the way back to December 2024, we've been in this kind of sideways consolidation chop period, which I think is going to turn out in hindsight to be an inverse H and S. These blue marks here are the two shoulders, and this is the head. It's the same chart as this. I just drew this a lot more clearly, a lot more beautifully. But so when I say we're zooming in, that's exactly what we're doing. We are zooming into this right shoulder. And for this right shoulder to play out means that the inverse H&S plays out. You see, they all dovetail together. And that's a very powerful confluence of TA structures and patterns sub-nested within each other. So we have this smaller pattern already broke out, needed to confirm, but looking good. And that's basically these two patterns, the flag and the pennant. And then you zoom out and you've got this inverse H&S. Well, that's looking like it's going to break out soonish. I give it a couple weeks. When that breaks out, we have a measured target of $150,000. And the backdrop behind all of this is a global M2 money supply line that has not stopped for really since back here in April. So it's got another equidistant period of movement up so far and hasn't stopped. And if you think about it, we have things like Trump's quote unquote big beautiful bill, which is really just a $5 trillion inflation package. And politics aside, I'm sure it does good things. I'm sure it does bad things. That is an inflation to the monetary supply of America. That's just one country, but all countries do this. And that's just an example of how and why this line goes up. And then the time it takes for the money in that $5 trillion package to be printed out of thin air, because it is, and that is what causes the monetary supply, the money supply to be inflated. The time it takes for that to trickle down to retail is the delay, and that's why we push this forward by 84 days. And it's sloppy. It's not exact. It's an average, right? It goes above and it goes below this 84-day offset. But I think this is pretty much the sweet spot. And I'm really trying to keep it the same because, I don't know, it's good to have a stability. Otherwise, you're trying to fit the chart. And I was called out on that, rightly so. And I'm trying to not do that anymore. I'm trying to really just look at the average here. This little formula I created really helped me to stick with an average. It basically averages the 60 days to the 2 years and gives me a percent so that when I'm shifting the chart around, I can see what is the best correlation. And so far, 84 days has really been the best correlation, has maintained that number one spot for offset. So I think that this is it. And I'm going to probably not move it again. I'm going to do my best to keep it where it is. And we can just look at the chart and you just have to zoom out. You have to not be too zoomed in. And it's quite telling. I mean, there's no way this is a coincidence. There's no way this is a coincidence. All the naysayers, it's not a coincidence. And to back this up, if you were to hate on the global M2 money supply, if you are a naysayer, then all you have to do is point them to the gold chart. And the gold chart leads Bitcoin in a very similar way. So it's not just that M2, global M2 is saying this. Gold is saying this too. Gold has been moving stratospherically, and Bitcoin historically follows gold. So there's too much confluence of indicators here for anyone to deny this. And anyone who is denying any single point of anything I've just showed you is cherry picking something and trying to make it negative, when the honest, intellectually honest answer is to look at all of these charts and how they're part of a confluence telling us one story. They're telling us Bitcoin just broke out on the small time frame. It's going to probably break out on the medium and large time frame, and M2 as the backdrop. Okay, guys, that's everything. I'm very bullish. I do think we will see $150,000 this cycle, and buckle up.